Anyway, what do you want to talk about, man? Do you want to do the scoreboard real quickly, and then
Let's
we'll talk about covered calls that are an absolute pain in my ass right now?
Yeah, let's do the scoreboard and then let's get into Tesla because I know you got some covered calls there, and I'm sure other people are trying to navigate their Tesla position.
Yeah, Tesla's fun, dude. This is what I call positive problem, but it's still a problem.
It
So
still indeed is a problem. That is correct.
it's still a problem. So if you want to share the screen real quickly, we can get rocking and rolling with it. So this is where we're at with net premiums, guys. 70,250. There's total open collateral right now of 391,500. And the open P&L on shares owned, that is not updated, so we'll go through it as we go. But it's probably going to be in that vicinity. I'd say it's going to be plus or minus about 1,500. And then these are the tickers that have made all the money. Hood's made 15. Shop made the 7,400. We're no longer in Shop right now. We're no longer in TSLL. We don't have anything open on HIMS. We don't have anything open on NVDL. We got the Path shares that we own at 31, and we collected 3140. NVIDIA 300 shares owned. We collected 3465. Snow made us 2720. We're no longer in that one. And then Intel, we collected 2330, and we owned the 2,500 shares. And then BITX was nice for 16,000, but that's way in the distance. And then Meta was good for 6,450, and that's how we get to the 70,000 in a nutshell.
There you go. There you go.
Pretty straightforward. Now let's look at the stonks themselves. And who are you going to start with? Tesla?
Let's do Tesla. Yeah, Tesla's not part of our challenge, but I'm sure people will get some value off.
Part of my pain in the ass situation. So right now here we got 2,500 shares, 196.76. So all that part is good. I went from bag holder to brag holder very quickly. But then I thought it was a good idea to sell some covered calls, Amit, because Tesla has just been printing money on the covered call campaign. And then all of a sudden, Elon Musk turned into Elon Musk, and Tesla turned into Tesla. And now we have a whole case of, oh, shit, what now? You know what I mean? So
yeah.
Let me just tell you how I've been managing it. I've been trying to just have very, very little stress. So I kicked this can down the road to January of 2025, and I got paid a cool $23,000 for doing that. But
for the same strike, 225.
No, so I'm going to go through the actual trades because this covered call campaign, I recently closed it, dude. I recently closed it, and then I opened it up again over here. I got 13,201 on June the 14th. I thought it was a good idea to sell covered calls at 185. And I got 13,201, and then I also sold some cash secured puts at 170. So I brought in 3,300. Then I rolled the cash secured puts, got 2,190. These were 195 puts that I've had for a while. Like this is like the fourth or fifth time that I rolled the 195 puts. And then I bought to close the 170 put, so I locked in a win there of about 2,600 or so, whatever that is. But then I started rolling the covered calls. I went from 185 to 190, kicked the can down the road about 3 weeks, got another 10,000. So I got 13,000 on the original covered call right here. Then I got 10,000 on this roll right here. And then Tesla like really went ape shit. So on July the 1st, I kicked the can down the road to January, and I went from a 190 strike to 225. How did I land on 225? That's the absolute most that I can convince myself that I can make an argument that Tesla could be worth $225 a share right now without just being ridiculous from a valuation perspective. But it just goes to show what my intrinsic value calculation means shit. Because the market is large and in charge, and Tesla's probably like 250 now, I think, right?
Well, I don't think it means shit. I just think you got caught in a pretty aggressive run, which you might end up being right on, that this run settles down. But I don't think anyone thinks realistically Tesla, given these numbers, is worth 250, 300. I just think the perception is the FSD growth is going to be so amazing that that's why the premium's there.
Yeah, but the thing is price movement is very irrational at times. Because
well, of course,
the majority of the people that buy the Palantirs, like they're just getting in right now. the majority of the people that are getting into Tesla right now, bro, they're not even looking at a market cap.
I agree. They don't give a shit.
They're just like, fuck it, this thing's going up, and I'm going to buy it for $1 and sell it for $2. That's what dumb money is. Probably 50% of it. Now, the other 50% of the people that are in this chat, they know better. Most of them probably know better.
So why did you pick 225 then if you know that it's gonna not be 225?
Because I didn't want to close it out, because I had the option to just close out the options and let Tesla run. But then if I'm wrong, I lose a lot of money on that covered call, and I have no hedge to the downside anymore.
Gotcha.
Because the covered call premium serves as a hedge to the downside. Because you can't forget, let's just do it where we're chatting. People are very, very quick to forget the kind of pain that a position was causing recently just because of a nice run up now.
Yeah.
It wasn't that long ago that I was down 6 figures on this position.
Yeah, when Tesla was at 160. Yeah, you're right.
So now I said, what, I'm going to act like it never happened? So I wanted to position myself to be like, you know what? I can lock in a $250,000 win if I decide to part ways with Tesla at
225
at $225. Because I did a checkup from the neck up. I'm like, okay, are you really long Tesla here? Or is there a world where you would, like, if you didn't have these covered calls on, where would you sell? And the number that I settled on was $275. If Tesla were, like, if I didn't have these covered calls on, Tesla goes all crazy, I would gladly hit the sell button at 275, and I'll see you when you come back down to reality. You're going to get rejected at about 300, in my opinion. You're going to come back down, and I'll start selling some cash secured puts, and I'll get back in that way.
So you would admit here you're actually not really long Tesla
on 2,500 shares. On 15 leaps, I'm long,
right?
Because those are printing. Because it doesn't make any sense. Like, I'm long as the valuation makes sense, guys. There's reasons that you're going to consider selling the stock. And that's the valuation doesn't make sense. There's a change in leadership. There's a change fundamentally, or there's something compromised with the moat. Like, those are the 3 or 4 things that I look at right away that are going to challenge my investment thesis. And I don't give a shit what they say on 8/8. They haven't sold one robo-taxi yet. You know what I'm saying? Like, at the end of the day, the numbers are the numbers, and they're not that great.
Right.
Like, what did they deliver? 443,000 units?
Yeah, it's still down.
What did they deliver last year?
I think last year was closer to 480 or something.
Exactly. So, I mean, like, did people understand what a PE is?
Yeah, but TJ, even though you're saying all that, I don't think I don't think that matters. I think the question is, does FSD matter? And if that's what matters,
I think it matters a lot. It's not here yet, though. Have you driven in a Tesla?
No. But I get all those points. My point is, if we just look at the stock, a 45% run, a $200 billion move is not retail. If we can agree that's not retail, that means
who has that kind of money? It's got to be institutions.
But so if that's the case, institutional doesn't give a shit if FSD almost tries to kill you. They don't give a shit about delivery numbers being down 15%. They care about the future, and if they're seeing the future's ready to go for Tesla, maybe that stuff really doesn't matter.
I mean, the chart says it could go to like 3. I mean, if you're like real nerdy on the charts, I'm not that nerdy, but I know what's going on with them. I think it could go all the way to like 326.
Yeah.
I think they go, and I'm cool with it. Like, I've already accepted that I am long now. So I'm just going to follow these covered calls up. And if I got to throw another year on my covered call and go from like 225 to like 275 for January 2026, it's not that big of a deal. The only thing that I lose, though, is I lose my cash flow that I was getting really happy with, because Tesla has been printing a lot of money on the covered call side of things. So now I essentially just get paid quite a bit of money to turn into a buy, hold, and hope investor. And for people who are like, oh my God, dead money. Oh my God, you're leaving all this money on the table. I'm like, you are too, motherfucker. You ain't pressing the sell button, so shut up. I don't want to hear your bullshit. Show me where you sold at 300 and at 350 to realize the win. We're all in the same boat. The only difference is I got paid a lot of money to be in this boat. What have you gotten paid? You're just excited because everything's going up and to the right, but you're not realizing any wins here. You're watching your paper gains and you're feeling real good about yourself, but you haven't locked in shit if you're not selling cover calls. Yeah. Or you don't have any cash secured put premium coming through the door. What money are you making? Does Tesla pay a dividend?
No. And see, the thing is, you may look a little like in a tough situation right now. If Tesla comes quote unquote back to earth, back to 200, you look really smart. So it really depends just how.
All I'm saying is if you ride it all the way up and then you ride it all the way down, the only thing that happens is you got excited. You rode the roller coaster. I made money along the way. Let's just call unrealized gains what they are. And let's call realized gains what they are. I'm making money along the way. And now I'm in this thing and I'm going to be in this thing for the next 3 to 5 years, because I think that the one thing that I know about Tesla, I feel, is I think that Elon Musk is kind of rededicating himself to this thing.
Well, he got paid.
Let me ask you this question a minute. Do you think that Elon Musk, dare I say it, he's been a little distracted for the last 12 to 18 months since he acquired some fucking platform called Twitter?
A little bit.
I think that he's rededicated himself now, though, because the little vote's gone his way. Now, granted, does the vote really mean anything? I don't know. Like, I don't know the intricacies of all of that, because I don't know that they're stroking him a check yet. You know what I'm saying? But things are going, the ball's moving in his direction. And I feel like he's kind of recommitting himself a little bit. And that is very, very exciting for Tesla, the company, and obviously for his shareholders as well. And if anybody can make this thing happen, it's Elon Musk. Because if he can't do it, who can? Like I don't, like, he's the perfect man for the job, right? Who else is going to be able to do this job?
Yeah. Okay. So this is the overall, that's what you did on Tesla. You just rolled it to January. That's how you're navigating.
That's it. And then I was able to close these cash secured puts at 195 that I've been in for like 6 months, dude, 5 months. And I finally closed them for 515. So I think I made about 11,000 on that cash secured put campaign at 195.
Okay.
So I'm real happy with Tesla as far as that goes. Like, I was actually going to go this one here. So here is Tesla.
Real quick, Palantir. Let me take a look, guys. Palantir. We're at 2674. All right, we'll keep you updated. Let's see if we can get to 27, but 2675 right now on Palantir.
So I've been wheeling this thing for a while, right? I mean, I did a live where I go through every single trade of Tesla on this particular account. The adjusted cost basis is 153. We're sitting on 2,500 shares, and we have the 15 leads. So, on the actual shares, the cost basis is 491. So I'm up 120 on the shares. The call profits printed 442, and the put profits printed 66. And this is also taken into account that there was about $77,000 invested on leaps. So I've already made up that. I've already made that up as well, because I bought these leaps for 57.5. And I bought these leaps for 25.2, so about 77, whatever that is.
Yeah.
So I've already made up all of that ground as well. So it's been a very profitable campaign. So we look at the entire position again on Tesla real quickly, and then we'll move on to one of our plays. So the covered calls are obviously, I'm babysitting the covered calls, but the one thing that is also helping me on top of the capital appreciation on the shares is I also have these leaps right here that I purchased some time back, and I'm up a cool 6 figures on those leaps as well. But I do have the covered calls at 225. 15 of those are they're tied to these leaps right here. Like, I'm running the 4-man covered call campaign as well.
So you can't sell these leaps yet because of those covered calls.
No, and here's the other thing. I have no intention of selling these leaps. I want to exercise these leaps a week before expiration, and I want to own 1,500 more shares at 150.
Ah, okay.
And then along the way, I'm going to buy 15 more leaps. So I may do what's called lottery leaps. That's what I call them. So I'm probably going to buy an out of the money call, and probably pick a 250 strike or a 275 strike in the distance. That way I can free up my covered calls over here.
Right.
And then I would be in a position to sell these for a profit if I wanted to.
Right.
because this was already in the plan, right? It was already in the journal. Like if this happened, like this is what I'm going to do. So this isn't all like reactionary. This is just me following the game plan. And truth be told, this is actually the best case scenario for me because now I'm up 6 figures on the leaps. I'm up 6 figures on the shares, and now I'm just managing covered calls that really aren't that underwater in my mind because I've got a $225 strike price. I mean, we still got a lot of extrinsic value left on the contracts. It's really not that big of a deal. The only thing that irritates me a little bit, had I played it a little bit differently, because the technicals were speaking to me, but I ignored them. I could have just waited another 3 or 4 days to start selling my calls, and I'd probably be sitting in the exact same spot, but instead of a 225 strike, I'd be sitting at maybe like a 235 or 240 strike. I would have wound up at the same spot, but I would be more comfortable with a higher strike price on the cover calls.
Right.
So I could have played it a little different. So I'd give myself like a C minus or a C for the way that I played Tesla so far, but I give myself an A minus for having a pretty high average, but still manufacturing a $200,000 win so far. A lot of it's realized though, right? Because I've gotten a shitload of premiums along the way.
Yeah, no, a lot of it is realized. That's the difference here.
And there's a big difference between realized gains and unrealized gains. And if you guys can't understand that, I don't know how much I could help you.
One of the differences is taxes. That's right.
Yeah, I got to pay those fucking taxes. God, man, why you got to bring up that shit? I want to move to Puerto Rico.
Yeah, well, yeah, that might be smart. All right, let's go to our positions. So let's check on let's start with Robinhood. What do we have on Robinhood?
So on Robinhood at the moment,
did we close out all the Robinhoods?
I think we locked that win. Well, you know what? Let me just go this way.
I think you texted me on Tuesday. We locked it in.
Did we lock in a win? I feel like we locked in a win.
Yeah, I think we had the $20 put for July.
No, dude, I think we're done.
Let's see.
Yeah, it's on July the 1st. We closed out. So we had these $50, or I'm sorry, we had 50 Casacure puts at 20.
Yep.
That we sold on June the 18th for June the 19th. So about a 1 month play. And then we realized the win by closing them out for $900. So we locked in $2,100 there. So we currently don't have anything open on Hood. Admit.
It's red.
Like say you.
Look, guys, by the way, Palantir is up right now, 26.81. Let's see if we get there to 27, but nice move on Palantir. Yeah, let's do some puts. It's down today. I think it's down with Bitcoin. Worth at least seeing what the premiums look like.
Yeah, I like it. Indeed, we've made a lot of money with Hood, like about 15, 16 grand. So we have, I mean, granted, that is, again, guys, whenever you've made a lot of money on a ticker, that doesn't give you a license to be an idiot, right? Like here, we got to treat it like a brand new trade. We like it at what, 2150-ish?
Yeah.
2021 maybe, because last ones we did it at 20. Let's just see what the options chain looks like, and maybe it'll tell us where.
Dude, I love it at 21, and the puts premiums are there. I think 21.
So let's look at fundamental stuff. Binary events. When do you know when earnings?
Is August 7th, so go to August 9th. Let's see what that looks like. $21 strike, $1.17.
So there's not a lot of people here. 69% volatility. Let me just look at the other one real quick.
Yeah. This is a week before earnings. 21's at 80 cents. Yeah. Adam said 22.5 strike August 9th. So that would be at the money if we do that. If we go below.
So you think the earnings are going to be good, right? Is that?
Yeah, but if Bitcoin goes to 40K around that, like I don't know if the earnings play makes the most sense at the money, just because I don't know what could happen macro wise. I do think it moons on earnings, but I don't know if we want to lock up like hundreds of thousands on.
Dude, there's nobody over there though. Dude, look at this open interest. It's shit.
Maybe go to July 26th. That's 3 weeks from now. The premium is probably gonna be worse though. 21 at 59 cents. I don't think it's horrible. Even 21.70, yeah, 79 cents. That's not crazy.
So what's the math on this one? Like if we do 79 cents for a 21-day trade at 21.50,
that would be 1% a week, 1.2% a week.
I say so. Then now we go over here to 35 days out because there's more volatility over here, and we stay in the same, and then we're getting 147. What's the ROI on this one?
That would be 6.8% on top of how many weeks? 35 weeks, 35 days, so 7 weeks. That would be about 1% a week. Yeah, still.
So it's the same shit.
Yeah, yeah. Yep.
And it just feels like this one's paying more because you're only adding 2 weeks to the contract and you're getting
that's actually a good teaching moment. Like it looks like it's paying more because we've extended the time, but in reality, when you do the math, it's not paying more. Palantir 26.94, guys. It looks like we want 27, so let's see if we get there. But yeah, I think the July 26th one isn't a bad idea.
So are you thinking like 50?
Yeah, I think 50 is fine.
And I think we can get a little better than that. No, maybe like 83.
Try 84. I think we get 84.
Nope. That's low.
All right, 83.
Even 83 is low. Yeah.
Well, let's leave it. Let's see if it fills.
Let's just go right here and see what happens. We essentially, in order for it to fill, we need Palantir to come down like 5 cents, give or take. We'll just put it on, dude, and we have till the end of the show. If not, we'll address it accordingly.
Yeah. By the way, guys, at 27, there's 46,000 shares waiting to be sold. So we need someone to swallow up 46,000 shares to get us into the 27s.
What, the Palantir wall? Is that what you're looking at?
The Palantir wall, yeah. We're using Robinhood. That's the software we're using right now.
Right.
What do you have any puts open on Palantir on your portfolio?
No puts right now on Palantir. I usually do them for earnings. When is one's earnings on Palantir?
Probably that same first week of August, most likely.
Let's see that covered call that's underwater. I have a $12 covered call underwater here. I've been telling them to take the shares. Nobody listens because I don't know why. I mean, look, what is that? That is 14. What's 26 from 12? Is that 14?
Yeah, around about 14.
So 14.95. So I still got 50 cents of extrinsic value. I've been sitting between 50 and 60 cents for a while. So yeah, I don't think they're going to take those shares. This is a good teaching moment for you guys, though, because a lot of y'all get all paranoid and stuff, and that's cool. And I get it. I used to do it too. But have you ever tried to exercise a long call that had a lot of extrinsic value? I did this exercise in the portfolio the other day.
I did not. I've never tried to do that.
So this is a real good teaching segment. How many people are watching right now?
We got about 1,000 people here.
Okay, awesome. You guys are going to learn something really, really good here. This is why options don't get exercised very often, is because this broker is going to protect you from being a fucking idiot. So let's take the Tesla.
And guys, I'll let you know when Palantir gets 27. I'll say it real quick, but right now it's still 26.96. Still not there. Go ahead.
So these Tesla leaps are printing. Fair enough. Like, let's just all agree on some basic stuff. This stuff is a very profitable trade right now.
Yep.
So let's just say I didn't have the leap. I didn't have the covered calls, and I just wanted to close this leap. It's going to give me an opportunity here to exercise this option. Or no, if I wanted to buy the shares, if I was just like hell bent on owning Tesla shares right now, because I'm like, oh, I don't want to run the poor man cover call campaign, doing this whole synthetic bullshit by doing the leaps. Let me just own these shares outright. I have a contract here that says I can own them at $150, right? That's what I paid for.
Right.
So I go here to exercise this option, hit continue. And then it says, why do you want to exercise Tesla 150 calls, 1/16/2026? So this thing has a quote unquote fiduciary responsibility. This brokerage has a fiduciary responsibility to protect me from being an idiot. Because there's a lot of laws that are in place to keep companies like Robinhood that have already been sued several times from the SEC and FINRAs and all of those guys to make sure that they're at least giving us the information. Whether or not we do anything with it as consumers, that's on us, but they got to at least put the information out there. So here it's like you want to click covering an early assignment, not enough liquidity on spread is too wide, or buying stock. So I'm going to click buying stock. I want to buy the stock, right? And then now it's going to say, should you still exercise? In these cases, you might want to sell hold the contracts instead of exercising them. Contracts out of the money, extrinsic value, high. This is why I think it's going to flag me and say, hey, you shouldn't do it. Or it's too expensive. And you hit continue anyway. You're like, nah, fuck it, I'm an idiot. And there it goes. It starts like again, flagging you again. Like, are you sure you want to be a fucking idiot? Because you got 25 $25 of extrinsic value that you're literally going to light on fire like a fucking firework.
Real quick, TJ, I got to interrupt you because we got 27 on Palantir.
That's awesome.
Guys, we have not seen 27 since February 2024, since we got the Titan contract. So this is a big one. 2750 is the next level we're looking for. But congrats. Not bad at all. Not bad.
So Amit, back to these paper gains and unrealized gains and realized gains. You feel real good about Palantir at 27 right now. I do too.
Yeah.
But what does it really do for you if you don't actually sell it right now?
It makes us feel. You get the ring of bell.
It just gives you the feel goods, right? That's all it is.
Yeah, well, you're right, but
I'm just saying, if you're selling covered calls over here, the premiums are going to be real juicy.
That's true. If anyone is selling covered calls,
but with this kind of mojo, I mean, what does the chart say? This thing could, if it gets over like what 28.5, it could go all the way up to all-time highs, essentially, right? Because there's not a lot of resistance there.
Not all-time highs, but 27.5. We need to break above 27.5. That's
so
all-time highs at 45 is going to be tough, but.
I'm just saying, dude, like I used to get real excited about paper gains. Now the only thing that gets me excited is actual realized gains, because the paper gains don't mean anything if I'm not willing to lock in the win. And I know that you're long Palantir, so what does it matter if it's 27 or 37? You're on this roller coaster and you're buckled in. You're committed.
It just feels good. You know?
It feels good.
I go to Wendy's, I get a little extra chicken nuggets. You know what I'm saying? Like it's just like there you go.
I'm just saying, it feels good.
But I do agree with you. I think, if I buy Palantir at 30, which I probably will do by the end of the year because I see a lot more growth, buying at 30 is going to be a little tough if the growth doesn't increase aggressively. But my adjusted cost basis is what I care about more than what my brokerage tells me. Because if I can use it to make money and I can wheel and deal it, because I understand Palantir better than I understand most companies, so I should have an advantage of wheeling and dealing it. I can get that cost basis much lower. So that's a good thing.
So guys, if you have covered calls that are in the money and the person on the other side wants to exercise and there's a lot of extrinsic value left on the contract, this is the kind of stuff that they're going to be seeing. So you got to be that special kind of idiot, the one that your grandpa told you about, the unicorn. Everybody knows what they look like, but nobody's ever really seen them. You got to be one of those unicorn idiots to do this, because it just doesn't make any sense. Why would you? Because you're not really buying them at 150. You got to add the extrinsic value to it. So now I'm picking it up at 175 and some change. So it's not really as lucrative for me as you would think that it would be.
Right.
Because that extrinsic value doesn't just go away. Somebody has to pay for it, because you paid for it whenever you bought the long call.
Yeah. Can we look at Palantir and see what the premiums look like? I know you don't want to sell covered calls, but for someone who did,
no, not covered calls or cash. I already have covered calls.
Yeah, but I want to look at. So we're not going to do it. But if you were to sell a covered call today on, let's say, 2,000 shares, what would you look to be selling?
I would definitely pick like maybe a 15 to 20 delta, and I wouldn't want to be in past earnings. I would want to cut off like a week or two before earnings. So a very short play, like I'd be looking at probably like right over here.
Yeah.
And just playing it real close to the vest and be like, okay, where is it not going to go to? And I would probably pick right here, like 29.50. It's probably going to be a 20 delta. Yeah, an 18 delta. This is where I would play.
Right.
This is where I would play, because I'm sorry, it just doesn't make any sense over here at 29.50. And then the chart also helps me, right, from a technical perspective. So, and the valuation. So I like that the fundamentals are on my side, and I like that the technicals are on my side in that 29.50 range. Just if you want to break some money through the door. And then the big money for me would be, when is earnings, you said?
I don't know, but probably the first week of August.
So I'd probably go over here, and there's going to be a spike in IV at some point, right?
Yep.
And then my strike price would probably be this $30 range. So here I see a 62.50, the 62.82% implied volatility for 8 and 9. So keep that one in mind. And again, 30 would be my number. So yeah, you see how the spike is up over there at 8 and 9?
Yeah.
So if you want to play that game, is it going to cause you a little stress? Probably, but you're also getting quite a bit of premium, and then you can obviously roll those accordingly. If you want to be a little more conservative, you can go over here at 31 bucks, and that's a 28 delta. It's a little bit safer.
Now, let me ask you a question. Palantir's obviously in an uptrend. Same thing with Tesla. Does it make sense to sell covered calls at all, or does it kind of just like, yo, I'm gonna, even if I leave money on the table?
So a lot of people want to wait. A lot of people want to wait until it's overbought on the technicals, right? So what is overbought on the technicals? There's one again. I'm not like a technical expert by any means, even though I've studied them way more than I care to admit. But you want to look at your RSI, right? Your relative strength index, and oversold is typically like under 30. And then overbought for me, it's like I look at like 75 to 80. That's when I'm like, okay, this thing's getting a little bit ridiculous and needs to cool off a little bit. Right. So you want to look at those technicals. Can you put the RSI on there and it'll tell you where it's at?
Yeah, the RSI right now on the dailies, on the weekly is 81, which obviously is overbought. And then on the monthly,
it's pretty frothy. Yeah, so it's pretty frothy.
Yeah, that's 80 on the monthly. And again, that's one metric. Obviously, that doesn't have to be the only metric, but okay. Let's go to Meta. So we sold puts on Meta. How's that doing? I think we're up on those.
I think I saw it, dude, and it was doing pretty good. Let me see though.
We sold at 490. Meta's at almost 530.
Oh, I sold the 200 cash secured puts on Riot earlier today.
Okay.
At $8. It was just like, I mean, not to give you all stock tips or anything, right? But right here, I'd bet anybody $100. I'd take up to 10 of you guys that I don't even have to look at this thing and it's going to expire out of the money. And if it expires in the money, then I'm just going to turn around and I'll swing it to like $10 and make $2 in capital appreciation on 20,000 shares. It's just it's a gift that sometimes the stock market gives you. It doesn't happen all the time. So over here, Meta, dude, wow, I didn't see that it was here. We might want to close this one a minute.
I think we close it. We're up 80%. Let's close that sucker.
So let's talk about that. You want to talk about scoreboard?
Yeah. So what we did on Meta is we sold 5 cash secured puts on Meta. Strike price was 490, so we put up 49,000 times 5, and we got paid $1,290 per contract, so yes. $64.50 in total. And that $64.50 right now is up $51.40, which means it's up 80%. We sold it on June 28th. It expires in a month. I think holding out for 20% in a month is not worth it. I think we take our money.
Just look at the collateral, Mitt, right? So now you look at, we always calculate the ROI. This is another good teaching segment for you guys. And I didn't start doing this till probably like a year ago. So I'm already 4 years into my journey doing this full time. So it's always like, when you close the trade, it's whenever you wouldn't put it on right now to begin with. Yeah. So we know how much we got on the front end. So now you look at this, you still have the same capital tied up. So now you're going to do the ROI on it, right? And we're only making $1,300, and see how shitty that ROI is. Because the capital is what? 49,000 times 5 contracts. So what is that?
245 grand.
Okay, so you're going to do the 1,310 divided by the 245.
It is 0.5% over 20 days.
I think you have your answer, right?
Yeah. Let's close it. Let's make some money on a Friday in the stock market.
So we obviously don't want to give the whole thing. Let's see if we can do it for like 264-ish. We can't go. Might know how to type in a 6. Telling you, man, those fireworks got me out of sorts a minute. So we're going to give back 1,320 to realize to free up 245,000, which means we can go shopping. There it is.
All right, TJ, let's buy up the rest of Palantir's float with that 245 and get that sucker to $28. Oh, 27.13, baby. A little bit of a breakout.
That is exciting. A little bit. It's huge. That's like huge. So you'll see the win right there, right? We got 64.50. We gave back 13.20.
Yeah.
So that was a hell of a trade, right? On Meta. I mean, we're in it for what, a week? I think we did this one last Friday, didn't we?
Yeah, literally a week. So that's what is the ROI on that? That's we got 6450 divided by 245. That was the initial. That's 2.6% in a week. We realized
you got to look at the realized. We just gave back.
Yeah, we realized 80%. So we made 2%. We gave away 0.6%.
That's annualized. That's crazy though, right?
2% in a week is not bad, dude. Annualized, that's over 100%. You know, that's not bad.
It's awesome for cash grabbing, but keep in mind there's no capital appreciation. There's gimmies and gotchas. So now it's like you have to go look at your next trade or look for your next trade.
All right, Palantir breaking through. What else do we have? So we did Meta. Maybe we want to show people what NVIDIA is looking like.
There we go. Where's NVIDIA?
All the way at the top. NVIDIA's at the top.
Okay, here we go. Well, actually, the easiest way to do it is to look at the actual shares, because then here it'll tell you everything that's tied to it. So we've got the 300 shares at 132. So we're down on these guys. You guys can see right there. But then we have two open strategies. We're running a mini covered strangle. It's not an official covered strangle because it's actually better than a covered strangle in my mind, because a legit covered strangle would just be 3 cash secured puts over here to match the shares that we have.
Yeah.
But we actually have 7 cash secured puts at 125, and those are doing okay because it's at about 128, right? So this part's good. But then we also have an agreement to sell the shares at 140. So let's look at the 125 put submit, and we're up 37% on those roughly. Expiring next Friday. So this will be very interesting going into next week. We collected 2310. We could close it out right now, but there's no reason to, but we could close it out for 14 something and realize the win there. And then we also have the covered calls that are absolutely printing money. Probably like about 90% there. Yeah, 91% there. So it's been a good rental so far. So now we got to look at, okay, what do we want to do for the next round of cover costs? Because it's not looking very likely based on this delta. It's 8. There's only an 8% probability they would have to part with these shares right now next Friday. So what are you thinking about going in to the following round of cover costs? Are you going to want to stay conservative over there at 140? Or do you want to maybe lower to like 138, 137 to bring more premiums through the door?
I like lowering it 138, 137. I like
Me
that.
too. Me too. Do you want to try to lock that in now and give back $93 and do it now, or do you just want to stay in this easy win and get the rest of the money on the contract?
No, I mean, if we're up 91%, let's free that up and use the shares to make more money.
So then you can just go roll the position. So essentially, what a lot of people want to roll down and up or out and up on a covered call. So what we're wanting to do now is we want to roll out and down. So we want to go out in time, down in strike price.
Right.
So then do you want to do weekly? Do you want to do 2 weeks? Like, what are you thinking?
Today's what, July 5th? I think let's do July 26th.
So right over here, so there's going to be a good grip of cash over here. So you want to go 135, you want to go 137. What are you thinking? Let's look at the deltas. So the delta is 28. So this is a pretty aggressive covered call. Keep in mind, we own these shares at 132 or something like that. So this still positions ourselves for pretty good profit. So we want to roll these over here. That rental would bring in, $657. So it's not like great by any stretch. Over here, we'd pick up another 816, but I feel like this one's definitely going to cause stress. Yeah. This is a 33 delta. So for that little amount of premium, I don't know that we want to bring in that kind of stress into the equation if we're kind of emotionally attached to the shares. Now, if you're not emotionally attached to the shares, a lot of wheelers, what they'll do is they'll just pick like a 133 strike because they're like, whatever, I want to be back in cash because that's their comfort zone. And they want to maximize the premiums that they bring through the door, and they're more comfortable making money on the cash secured put side of things, kind of like the way that we have the 125 puts now. I think, right? So we have 7 puts at 125.
Yeah, I actually don't like any of these, to be honest. I don't even like the roll. I don't think any of this is like exciting.
Yeah, so me neither. So I'm glad that you're on the same page, because my suggestion is do nothing
Yeah, yeah.
And actually hope for NVIDIA to go up to like 131, 132, and then put them on again because you're swimming with the current at that point.
Yeah, yeah, yeah.
And we make a little bit more money on the covered calls because what happens is we're not getting very much premium, and then we're potentially creating stress down the road that didn't even have to exist.
Yep, I agree.
Sometimes the best move is to do nothing.
I agree, 100%.
So now you want to look at Path. Path is actually a little bit of a pain in the ass position now, believe it or not.
Yeah, let's do Path as our last one. I think that's the only other thing that we have, but it is up though. It's doing okay.
I remember I bought these and because I thought it was a good idea to buy the dip at 30%, and it kept dipping, right? Because that's what always happens. So we ended up at 2,000 shares at 12.15, but now we have covered calls that are underwater. Path is currently at $13.08, and I've got covered calls at 12.50 expiring next Friday, and I've got covered calls at 11.50 expiring for next Friday. So both of these are underwater. So what I did omit because I wanted to pick up some money that we're potentially going to be leaving on the table is I also sold cash secured puts at 11, and I sold 20 cash secured puts at 12.50.
Right.
To kind of like already saying, hey, we could potentially be losing these shares. So we're leaving some money on the door, on the table. So let's position ourselves to at least try to make money over here. And then we're essentially just literally wheeling the stock. So now here's the question for you. You want to let those shares go, or do you want to roll the covered call and maybe try to go from 11.50 strike to a $12 strike? We'd probably have to add a month and after the contract. Or
I personally don't give a shit about the shares.
Huh?
I don't give a shit. I think we let it go and just use the money somewhere else.
Yeah. So that just tells me that the conviction is very, very low for you.
Yeah.
And you're like, you don't want to turn a winner into a loser.
I don't even want to worry about it.
Well, this one doesn't worry when we're talking about we made money because I bought these shares for like 11.
That's what I'm saying. I don't want to roll the covered call and have to wait until that continues to play out. Like, I think we take the win, get it out of the portfolio, and then just put the money somewhere else.
Like it. I like that. I like the idea. I like that you're not letting price determine what you wanted to do all along.
Yeah, because it's a shit company. I mean, at the end of the day, those numbers were disgusting. So this is a nice technical rebound, but I could be wrong. I don't think it's heading back to 20 anytime soon. So
very good. And I don't see anything else that Intel, the only other one is Intel. We've got 2,500 shares of Intel. We can end with this one.
That one's been going decent for us.
So there's 2,100, 2,500 shares of Intel that we got at 30.69. So we got a little bit of capital appreciation, but not all, because we sold cover calls at 31. So these are also in the money now.
Yeah,
so I think this one's a stickier situation because Intel has been performing like shit, but I don't necessarily think they're a shit company. I think they're going through this transitional phase. It's probably going to take another 2 or 3 years, maybe longer.
Yeah, I don't think they're a shit company either, but I would wait until the expiration on these before we decide to roll, because Intel always finds a way to kind of stay in their range, and it's very likely it could go down to $30.80 the day of, and then we can get a better roll.
So here, guys, we have 39 cents of intrinsic value. And that means that you're going to take that 39 subtracted from the 73. So another 35 cents or so of extrinsic value. So there's like no risk, in my opinion, that these shares will get called away from us right now. So I think we just position ourselves to pick up these $3 a contract in theta, because it's going to escalate as we get closer to the expiration, and then we can see what we want to do next Friday if Intel's in this range. Now, if it goes to like 32 and some change, then that might be a little bit different.
Which is unlikely in my.
I agree. I agree. So then at that point, now what are you thinking though? Like, what are you thinking? Do you want to keep Intel in the portfolio, or are you just like, we made a couple $1,000, call it good, and now we got to keep going and looking for another play?
Yeah, if we make some money, we make some money. If we keep it, I'm happy. But this is going to be a slow mover back to 50, dude. It's going to take a long time. So I do think it will get back to 50. But if we leave it, then we leave it.
So another thing, though, we haven't gotten these filled.
Okay, so maybe you want to reduce it by a cent.
Wait, did they? Hold on, did they? Oh yeah, we just got them filled right now.
Okay, there you go. 82 cents.
So now we have a lot of money, though.
Yeah,
we have a lot of money
figure out
because
what we're
you just freed up Meta and everything else.
I don't even know where to put it. I'm gonna have to think and let you know. I think some of our regular plays, Meta, Hood, can be winners again, but I would have to think, where do we want to put that money?
Yeah, because I think like TSLL, Nvidia, like those are not attractive right now.
Yeah.
So this is, again, whenever you're selling cash secured puts, this is the situation that you're going to find yourself in a lot. We can end with this right here, Mitt. You're real excited because you're making money. It's like us being excited because I'm excited because Palantir's up. I have another 10,000 shares that I don't have covered calls on Palantir. So I'm like super, super excited. And I bought those shares at like $7.10. So I'm like, dude, like, I can't believe I'm even in this situation to where I don't have any stress whatsoever on covered calls.
Right.
But whenever you're selling cash secured puts and you're cash grabbing that way, you're always going to find yourself in a situation where you got to go find your next setup and your next play. So it is a job in that sense. So it's real important to have a watch list of like 7 to 10 stocks that you're very, very familiar with, because you're just essentially just playing price action on those stocks. You're just playing price wars on those stocks. So we have Shopify that we could look at. We have, in this portfolio, the ones that we've danced with already is the stuff that you first want to go to because you're already a little bit more familiar with it before we keep always going outside of the box.
Right. No, 100% agreed. TJ's YouTube is in the chat. Please make sure to check him out. Thank you, TJ, as always. We got some big wins here, and I guess now we'll figure out what to do with the extra 400 grand that we got to put somewhere.
Look, can you look at this real quick? This NVDL 73 put is paying 240. Dude, that is crazy.
Yeah, but that's at the money. NVDL is up 400% this year, which is insane. But it's leveraged to Nvidia. So
let me throw a couple tickers at you. Do you have 1 minute? Do we have 1 minute?
Yeah.
What do you think about is it XOXL? Isn't that the semiconductor ETF that everybody likes?
Yeah. I don't like that because semis have run so much. I like it on the put side, maybe. But the call side.
And this is another one. Shout out to Matt Money. He's always teaching and preaching and telling me that we need to be selling puts on TQQQ.
Yeah. I mean, if you're long tech, then being long TQQQ is not a big issue either. It's kind of like NVDL, right? It's like if you're long NVIDIA, you believe NVIDIA is the tech of the century, then being leveraged against that isn't the worst thing ever. Same thing with TSLL. That thing popped up to, where is that, $14 now? After being at $7 for a long time. Yeah, there you go. No, I think that makes sense. And then SOXL 3X semis, that's had a hell of a year because NVIDIA's had a good year. So all these have had a great year. I just think it is a little, now getting into them is a little tough because they've had a great year. But if you believe the semis will keep continuing, then, not the worst.
Then there was another one that this guy gave me. I'm trying to find it. It was a good one, dude, and I meant to give it to you, but I'll have to text it to you because I won't be able to find it under pressure right now. It was some sort of a cloud company, and the premiums were like really, really juicy. It's a cheap company, dude, but it's growing like hand over fist, and they're extremely profitable. Okay. I think it's called GTC or something like that. But anyway, do your word of the day. Maybe I'll be able to find it.
Okay, word of the day is glabrous. This is an interesting one. Having a surface devoid of hair. Oh, TJ, this is glabrous.
That's tough, man.
Glabrous. I will one day be glabrous, but as of now, I'm not glabrous. Some people have naturally glabrous skin, free of hair. The glabrous leaves of Japanese camellias are smooth to the touch. All right, there you go. That's the word of the day. Glabrous. Everyone's like, hey, are you gabrous? I know that's what they're going to say.
So that's the stock right there that one of my members gave me, and he's made a ton of money off of it. So I was like, I'll give it a minute. Maybe you can check it out. Have you ever heard of that company? I've never heard of it.
I've never heard of this. I'll look it up. GCT.
Allegedly, the growth is really good, and they make money.
All right.
That's all I can tell you. I don't know. I can't substantiate any of that stuff firsthand. This is just what he's telling me.
All right. Sounds good. TJ the Wheel Deal. Thank you again, guys. Is YouTube right here in the chat, and we'll be back next week. And we'll see what moves to make. But I'll probably text you in the next couple of days because we got some money that we got to allocate. So we'll make some moves.
Sounds good, man. Y'all have a good one, man. Appreciate you guys.
All right. Bye, TJ. Thank you.